Okay, welcome back. Counting down to the market closing. Jay Bala is now with us at cashthechaos.com. Jay, good to have you with us here. Markets under a bit of pressure. Is 19,500 going to hold? Is it important that it hold? And near term, what's the prognosis?
Yeah, in the very near term, I anticipate a bounce to about 19,800, just like I expected last week. I don't think the bounce we saw last week to about 19,760 was good enough to qualify as a complete bounce. So even if the markets were to drop, I think it will hold about 19,222. I think even 19,350 as a good support will offer the markets support. But from a slightly higher time frame, the markets are likely to drop lower because of global macro, and India at this time may not be spared, and it will probably go in sync with the rest of the global equities.
All right, Jay, hi. So the Indian markets could trend lower, and the Nifty Bank will have to play a role, right? In the last 10 days or so, we have gone to 43,800 and we have bounced off that. Do you think that's under threat?
Yeah, the problem for the banking sector is coming from the private sector banks, like I pointed out last week. There is a considerable amount of weakness from HDFC Bank, Kotak being the weakest. And now this week, ICICI has clocked a lower low after clocking a lower high. So, the pressure for the banking sector is coming from the private sector space. But SBI is trying to compensate and trying to defend the index. So if the banking index were to stay above, go below 43,830, then that will be a problem. And the next support is about 43,500. So the banking sector is actually causing quite a bit of worry than the frontline indices. So watch out for weakness coming from the banking sector space.
Okay, so that's a warning we need to keep in mind. Jay, just stay. Get back and talk about, of course, the biggest story out there in markets worldwide, right? And that is what's happening to U.S. yields. I mean, it's relentless. 4.5, then 4.6, 4.69, I think, overnight. What's your sense? What's playing out here, and what are the levels you're looking at?
Yeah, the momentum for the U.S. 10-year yields is still unabated, and there is still further highs to come through. But I anticipate some sort of, cool off for the U.S. 10-year yields about 4.8. Around that ballpark. But if 4.8 and change were to break through, I think the next level is going to be about 5.3. The basic point is we have at least one more high to come through for the US 10-year yields. But I'm no longer bearish on the ETFs, IEF that tracks the US 10-year yield. But since no longer incrementally bearish, there might be cool off for the 10-year bonds.
Okay, very quickly, Jay, give us your levels you're looking at on Brent as well as the dollar index.
Yeah, as long as Brent manages to hold 87, still bullish, and we could have one more higher highs to come through. And dollar index is on a streak. It's on its 11th consecutive week of gains, and it's continuing. From a very short-term perspective, anticipate the dollar index to at least print about 109 to 110. From a medium-term perspective, much higher levels. The pullbacks are likely to be bought. If you look at the cross currencies, USD JPY is going to be the most important. And if USD JPY crosses 151.95, most of the technicians will turn bullish, and I'm anywhere bullish for the long term too.
Okay, and okay, got that. Sorry, you mentioned oil as well, Jay?
Yeah, oil 87 is pretty crucial. My thesis is that if 87 breaks, oil will fall in sync with the global equity markets. I'm waiting for markets to confirm where it's going. But my principal thesis is oil is going to drop along with global equities.
Okay, all right, fair enough. We'll leave it there. A shorter conversation than usual, Jay, but we'll make up next time. Thank you very much for joining us and running us through what you're making of things. I think we've come to a close.